This is Craig Haugard with your Financial Issues Ag Update. Well, corn prices traded lower yesterday as the sharp losses in the energy and equity markets spilled over into the grain markets as well. In a day that didn't give us much to cheer about, I found it encouraging that corn prices traded off their early lows on a late round of short covering. Weekly export inspections only added to the bears' courage as they came in below expectations at 32.7 million bushels. As I record this, however, we do have the overnight spot corn futures trading 3 cents higher. Soybean prices fell sharply in sympathy with the energy and equity market fallout yesterday. I find it interesting that some analysts are suggesting that the Brazilian crop may not be as big as what has been anticipated. Trade guesses are backing down from that 125 million metric ton to numbers possibly as low as 122 million. That'd still be 5 million metric tons above last year's production. Now, that may ultimately be true, but one thing I know for certain is that China was a buyer of nearly 30 cargoes of Brazilian soybeans last week, and the Brazilian farmer continues to be an active seller of beans. Well, here in the U.S., our weekly export inspections came in at a very disappointing 21 million bushels. In the overnight trade, spot soybean futures are trading 9 cents better. Chicago wheat futures drew support from intermarket spread activity, along with a bout of short covering to actually close 3 cents higher yesterday, while the Kansas City and Minneapolis markets reached 4 to 5 cents lower. Winter wheat crop conditions improved in Kansas and went from 41% good to excellent last week to 47% good to excellent this week. Oklahoma improved by 1% to be at 58% good to excellent. But we saw the Texas crop decline by 10% to stand currently at a rating of 26% good to excellent. Weekly export inspections of 15.3 million bushels were a bit over 9 million bushels short of what we need to average to hit the USDA's annual export projection. As I record this, in the overnight trade, Chicago was 2 cents higher, Kansas City is up 3, and Minneapolis is better by 4 cents. The cotton market turned in a negative session, with the May futures closing down 158 points to settle at 61.21. In the overnight trade, we're snapping back a little bit, trading 49 points better as I record this. Livestock futures had a tough day yesterday. The April live cattle futures contract finished down $2.90, while the April feeder cattle futures were down the $4.50 limit. Lean hog futures were not immune to the slaughter as the April futures finished the day $2.92.5 lower. Class 3 milk futures sold off, with the April futures closing down 22 points, settling at $15.81. In the overnight trade, we have spot futures trading 2 points better. The cash livestock markets were split. At the close, we had choice beef boxes 11 cents lower, closing at $207.36, while selects were 25 cents lower as they settled at $202.32. Pork carcass values, on the other hand, were stronger as they closed up $1.09 to settle at $67.95 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.